Thanks for supporting the channel by clicking the links in the description box. And thank you so much for liking, commenting, sharing, and subscribing. And now let's get into this Podversation. What's up, everyone? This episode was inspired actually by another person that I am subscribed to their YouTube channel, and their podcast is called Raondail's Unpopular Opinion. And I really love the content that she talks about and she shares. And something that she talked about recently I really identified with, and I just wanted to share my views and my opinions on this topic, because being someone who has been a business owner for a long time, going on September will be 13 years that I have been a business owner, brick and mortar, having employees, paying payroll taxes and all of those different things, and dealing with situations where I don't even say had to, but different situations where I've dealt with having personal credit being utilized and also business credit. And just seeing some of the disgusting and deplorable things that these financial institutions do is just really disgusting. And when you hear about this credit system and all of the things that they do to change the rules, how the FICO system, at one point it's FICO 7 and then it's FICO 8, and now they're basing it on FICO 9, and these are the new rules, and this is how they're now calculating the credit scores. These things were set up as a setup. I believe that these things are put in place to hold people back, and it's a game, and the game is not meant for you to win. So if you're winning, consider yourself lucky, pretty much, because the credit system, if you have money, you need to have established some credit in order to get certain things, but having money is really what gets you the access even more so than credit. That's my opinion, and I'm just saying that based on a lot of different things that I have experienced and how these financial institutions play games, but yet the government will bail them out, but the government will not bail you out, okay? So recently, Wells Fargo, which is a financial institution that has experienced a lot of things in terms of controversy in the recent past due to some horrible tactics that they put in place in order to have their numbers looking good. So they would have their employees doing certain things that were pretty much criminal in order to reach their employees to reach these numbers and hit these goals, getting certain number of accounts established every month, whether it's business checking accounts or mortgages or lines of credit cards, all of these different things, these things that the financial institutions make money on. They make money, they charge you all of the interest for the things that they have granted to you in terms of loans, but yet when it comes to your money and the money that you put into their accounts, you're hardly getting any type of return on it. So that's why just keeping your money in a bank account really does not pay. It doesn't pay you. They're making money off of your money. When you keep your money in these accounts, they're making money off of your money. But anyway, I digress. Recently, Wells Fargo announced that they were closing all personal lines of credit for their customers. Now, I'm just going to read a little bit of an article. This is from the Atlanta Journal-Constitution. And it says, Wells Fargo recently announced it will no longer offer personal lines of credit. Wells Fargo, a financial services company, said it has decided to discontinue offering new personal and portfolio line of credit accounts and to close all existing accounts, according to CNBC. Wells Fargo previously offered revolving credit lines ranging from $3,000 to $100,000. In a letter to customers, Wells Fargo gave customers 60 days notice, according to reports. Customers no longer will have access to that line of credit once the 60-day period is over, but they will need to make regular minimum payments on their balances, according to reports. In the letter, Wells Fargo told its customers the closures, quote, may have an impact on your credit score. Wells Fargo CEO Charles Scharf has been faced with difficult decisions during the pandemic, according to CNBC, offloading assets and deposits and stepping back from some products because of limitations imposed by the Federal Reserve. Since 2018, Wells Fargo has been prohibited by the Federal Reserve from expanding its balance while it works on fixing compliance issues that surfaced during a scandal related to opening fake accounts. Again, something that should be criminal, because if you or I as consumers went out and opened fake accounts in other people's names that we didn't have the authority to do, using people's personal information, their identification, and all of those different things to open up fake accounts, that's criminal. That's a crime. We can't do that, but they did that. So it says in 2020, Wells Fargo stopped offering home equity lines of credit and stopped making loans to independent car dealerships. Okay, so here's the thing that I want to talk about when it comes to these banks and the credit system and how these things work. For them to say in the letter to their customers, this may have an impact on your personal credit score, it absolutely is going to, because when these financial institutions shut down, whether it's a credit card you had, a line of credit, something that you have had open, that does have an impact on your credit score because it's going to affect your debt to income ratio. So if you have a limited amount of credit, and let's say you had a personal line of credit with Wells Fargo for $5,000 and it was almost maxed out, but yet you also have maybe another credit card for $10,000, which only has a balance of about $2,000. And then you also, have maybe a mortgage and an auto loan, and these things are not even close to being paid off. And they close this line of credit, which shows as an open account. When they close it, that impacts your credit score. You have no control over that. And then that also is going to affect your history, because let's say you open that personal line of credit, say maybe 7 years ago. Your credit history is impacted by the history. One of the largest scoring factors for the credit score is the history of your credit accounts. So when they close that account, that affects your history, which impacts your credit score. And again, it affects your utilization and your debt to income ratio. So it's not fair, but these are the factors that the credit scoring system puts in place, and we have absolutely zero control over that. But yet, they, being the financial institution, they can do something like this and cause an impact to your credit score, and there is nothing that they will work out to help their customers with this situation. And they should have remedies in place to rectify things like this when a financial institution decides to close your account. But unfortunately, they don't. And unfortunately, credit issuers, they can choose to close your account at any time without notice. They really don't even have to give you much notice. So the fact that they're giving their customers 60 days, I guess they feel like, oh, well, we're helping our customers out because we're giving them 60 days notice to say after 60 days, you're not going to be able to have access to this product anymore. But here's something else that they can do in the interim. Maybe you have this personal line of credit and you don't have much of it used. You have a $10,000 limit and you get this notice and you're thinking, okay, well, shoot, I'm just going to go ahead and use this line of credit for some things that I needed to get done or want to get done. And then I'll just make the payments because it's going to be closed. So I might as well get access to the funds and do some things with it. And then I'll make those payments because they're going to close the account anyway. But what they can also do, and they may have already been doing this to some people, is just because they've given the 60-day notice to say that you won't be able to have access to this after that time period, they can also lower the amount of the credit line so you won't even have access to the amount that you previously had access to. That is something that has happened through the pandemic. I saw a number of people that talked about having received notices from their financial institutions about credit lines that they had that they were either reduced or they were cut off because they felt like, well, we want to reduce our risk, and this person has a credit card for, say, $2,000 and they haven't really been using it, and maybe they lost their job, maybe their hours are limited, maybe their pay isn't what it was. We don't want to take the chance of them maxing this credit card out and then they default on it and they don't pay us back, and then we have to end up charging this debt off and getting pennies on the dollar for the debt. Because when they charge your credit off, they're selling it to these collection agencies, and the collection agencies, they're paying pennies on the dollar. These companies, they have insurance policies on your account, so when you don't pay, they're getting paid on the back end. They're just not getting paid from you. And then they sell these accounts. That's why they can afford to sell these accounts for pennies on the dollar to these collection agencies. And if the collection agency is able to get anything, it's a win for them because they're getting something that they really didn't have access to. Because the collection agency, they're not collecting the funds and let's say asset recovery systems. I'm just putting some fake name out there of a collection agency. Asset recovery systems decides to buy your debt from Wells Fargo, and they are trying to collect the funds, and you set up a payment plan with asset recovery services. The money that you're paying asset recovery services, they're not sending that money to Wells Fargo. They're keeping that money. That is a win for them. So the system is just very disgusting the way that they do things, but hey, that's the system. So back in 2008, when the banking industry got bailed out by the Obama administration saying, they're too big to fail. Well, listen, the people, we're bigger than these financial institutions. No, collectively, we may not have as many assets and as much money as they do. But if they can get bailed out, why couldn't the people get bailed out? Because a lot of the things that happened with them was they were allowing people to get into home loans that they knew these people couldn't afford to get into. The people had to get their properties foreclosed on. They had to move out, and no one was there to bail them out or there to save them. They put measures in place after the fact to help protect people in the future if they got into a situation where they could not continue to afford to pay their mortgages. And so they've put these different payment plan types of situations and scenarios in place to help people to be able to stay in their homes where they can have their loans modified and those different types of things. So the bailouts that the banks receive, they're not looking out for you. So for Wells Fargo to do something like this where it's going to impact so many people's credit scores and affect them financially, it's just so unfair. But this is the way a lot of these companies, like these banking, institutions work. They do stuff like this all of the time. I would really love to know what your thoughts are on this in the comment section. And this is going to be continued actually on a podcast that I'm going to do about this, because on the podcast, I'm going to share some details of some things that happened to me by another financial institution in a similar situation regarding a line of credit. So I'm not going to share that on this video, but I'm going to talk about that on the podcast. So if you're interested in hearing that story, I encourage you to go to subscribe to the Being Beautifully Honest podcast and listen to the rest of this episode there. So I will meet you over there, and I thank you so much for listening, liking, commenting, and subscribing. And until the next episode, I'm just being beautifully honest.